Stacking up today, Todd Bubba Horwitz joins me now to take a look at a trade. And is this a pairs trade you're bringing to me today?
It's my own personal pairs trade, but it is a trade in the tech space. So yes, it is be like a pairs trade, and I think I want to look to buy Apple. It's been depressed down 8 or 9 days in a row with the longest streak in forever. And I want to sell Facebook. I love Facebook. Don't get me wrong. I think Facebook may be the first $1 trillion company eventually. But I think here it's been way overdone to the upside. I think Apple's been way overdone to the downside. I think you put the two together, you turn them into a pair, and I think you get one come down, the other going up, and you can make some money right there.
Ooh, okay, so I want to talk about this and break this down a little bit because you have been on the show before, and I remember you saying 92 and really 90 below that in Apple are entry points for you. That's where you're comfortable buying Apple shares. And, you know, lo and behold, Apple had a nice ramp up. Started to come back down. Right. Oh, look how happy you are.
Well, no, I mean,
yeah.
You know, it's always nice to, you know, I really preach how to look at a chart and how to read the footprint because the markets do leave a footprint. And 92 is a footprint from August 24th of last year. We came back and tested again. And then you could see when the rally got a little bit weaker and you know little problems are going to Apple, that 92 again should be an area if we can escape maybe even the 90. But this is a great area. Look, the company's fundamentally as solid as they get. So I think you look here, and that's why I like that level.
What do you think is going on behind all this? Is it just that people are afraid that maybe Apple tablets and Apple iPhones are not as hot as they used to be? Do you think that's what's happening, or is it just a technical issue that's moving this stock and the traders who are just busily in and out of stocks all day, the machines are moving the stock?
I think it's probably a little bit of both. I think there is some concern. You know, we still hear about Steve Jobs and, you know, obviously passed years ago, and Tim Cook hasn't been as innovative maybe. But I think what happened to Apple, all of a sudden they got big. I mean, they're always big, but they got like IBM big where they couldn't come out with enough new products. So now they're starting to feel that pain of an IBM, of a Microsoft. But I do believe that Apple, out of all of them, will be able to recover faster and be more on top of this market sooner than IBM and Microsoft, because those two are still trying to fight to get there, where I think Apple will be there shortly. And I think, you know, down these areas, it's one you want to own for the long term. It's one you want to hold.
Now, Facebook, on the other hand, as you mentioned, has had this huge move. So what would you do with a stock that just seems to want to go higher?
Well, you know, I like Facebook a lot. I do think it'll be the first $1 trillion company. However, we've had such a big move, and with last week's boxcar earnings, I think there's a footprint in Facebook that has to come down into the 90s to be really solid. Now, you know, you have to remember, as an investor, you're not watching day to day. You shouldn't be looking at it, or you should hedge it somehow. But from a trading standpoint, to me, I can see the footprint saying that the 90 level is a pretty good area to look at it. That's where I'd like to buy it. To trade it, from a long-term perspective, I'm going to hold it. But so when I look at the two trades together, Facebook is way stretched to the upside, and Apple is way stretched to the downside. If you just remember one thing, usually things revert to the mean, which means they'll come back in or go back out. That's what I would expect to see here. Although I like both companies, I think at this point they'll go in opposite direction for the next couple of weeks.
Now, speaking of opposites, Scott Bauer was on the show earlier, and he was thinking that Tesla is more likely to go up than down, but you see it in reverse.
Well, you know, Scott was a little bullish as well, and I think I look at the entire markets as a little bit of trouble here, and I think that we're missing volume and volatility. But Tesla itself had the brightest CEO ever. He's probably a Steve Jobs before Steve Jobs. I mean, he's figured out how to get all these tax breaks. He figured out how to do everything. In the meantime, they're still losing $5,000 for every car they put out. I can't see Tesla performing well. I could see it pop a little bit, but overall, Tesla has to be a sale. It has to go lower, and you're going to see probably there's a pretty good footprint down about 140, and that's where I look for it to end up before we see any major move to the upside.
That would be some kind of move. Well, thanks for coming on the show.
Great to be here.
This was fun. Thank you.